Good morning and welcome to our 293rd weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. So the way this call works is this is like an AMA on Reddit, meaning ask me anything. You could ask me business questions, career questions, investing questions, startup questions, personal development, personal growth questions, etc. You can type your questions down. I'll answer them all in the order in which I received them. Before I get started, I just want to say a very happy Diwali, which means the victory of truth over darkness. Yeah. One of my students told me about it yesterday. Very cool. It's a happy day. All right, let me kick it off here with Sanjay, who wrote, "Hi, Chris. I've started a YouTube channel. How do I get more attention and more subscribers and more views?" Yeah, I'm happy to help you out. And I recommend everybody in this call to please start a YouTube channel as soon as you can, because I do believe that in 5 years, artificial general intelligence will become a reality to the extent that we'll be learning and watching avatars, meaning not real people. So you've got 5 years to build a brand of you. Now, what I do with this weekly call, and I'm going to tell you how to get more subscribers and how to get started, etc. But what I do with this weekly call is we repurpose all of the content from this call on different platforms. So we take the 7 best questions asked every single week, and we put it on TikTok, Instagram, LinkedIn, etc. And if you're going to create social media content, please don't try to be a perfectionist. As Salvador Dali said, if you strive for perfection, you'll never attain it. Just get the content out there. It's just like with a startup. If you release a product when you think it's ready, you've missed the market. And as Reid Hoffman, the brilliant co-founder of LinkedIn and a partner at Greylock Ventures said, if you release a product when it's ready, you've missed the market. All right. So the first thing I would say is to be consistent with your content. You know, like, for example, for me, I do this weekly call. I'm consistent. I'm consistently bad. I've been doing this for 5 or 6 years now. The second thing I'll say is if you're going to do live webcasts, have a script ready in case nobody shows up. So when I first started doing these things, like nobody showed up and I was kind of nervous. I was like, oh my God, what do I do? Have a script ready. The next thing you want to do is when you put out content, meaning vlogs or YouTube shorts, which everybody should do because the market is taking off, you want to make sure that you read the comments because the marketplace is going to guide you over time. And with me, for example, when I first started doing these weekly calls and creating YouTube content, I thought all people wanted to hear from me was stuff about finance because I worked, in the finance industry for 8 million years. But then the comments stated that people kind of like to hear about personal growth and startups and all that stuff. So read the comments closely, please. Now, when it comes to repurposing your content, you can even do it this way. Write a LinkedIn article, 1 per week. Publish it on LinkedIn. Then make a video out of that and make that a YouTube video. Or better yet, what you can do is what I did, which is when I worked in venture capital back in 2013 for 2 years, I wrote 1 article per week. And the 100 articles that I wrote over 2 years that I put on LinkedIn, I repurposed and repackaged into a book. Okay, and the way I knew which chapters to put first were the ones that got the most clicks, likes, controversial comments, etc. And if you want to write a book as well, you can go to my website, and I'm going to show you very quickly. I don't ask for your email or anything, but I'm going to show you exactly how to do this. So go to harounmba.com/writebook. And you can download a template here for free on how to write a book. If you know how to use Microsoft Word and a browser, you can write a book. So that's what I recommend doing. Now, in terms of other tips, so you got to start with shorts. And the reason why I say you got to start with shorts is because if you look at TikTok, they've seen ridiculous growth because of this new vertical format. And so YouTube has kind of adopted their strategy as well and added shorts. And I found that my YouTube channel has seen material growth in subscribers in just the past 2 weeks because we started putting shorts directly here. Now, if you want to look at my older stuff, you can always go to my website, and then you can look at all of my webcasts over the years and how I've changed. But I want to highlight one thing very quickly here. If we go back to October 31st, 2019, which was 5 years ago, I did a webcast that was 9.5 hours long. And this was gold for me in terms of starting my business. And I didn't get up once. It was cray, but I loved it. Look how much younger I look there, eh? But I got a lot of feedback from the marketplace. And this was gold for me in terms of the business model I wanted to develop, meaning my online MBA program and online courses, etc. Now, in terms of the backdrop, what I recommend doing is get 2 lights, one on each side. And I'll show you where you can order these lights. I don't get paid for it. Okay, I don't get any affiliates. But I'll show you in a second. You want to get Westcott basic lights. That's how I started. And what that means is 1 light on each side. You can get a package for $100. Okay, so 1 light on each side. And the reason why you want 1 light on each side is if you put it in front of you, you cast shadows on the back. You also want to stand about 5 feet in front of the wall. Otherwise, you'll cast shadows here. You can get a blue light to shine in the back if you want to as well. That's what I do. And let me show you the microphone to get. So when you get started, I recommend getting a blue Yeti. It looks like this. It's about $100. It's good, good enough. And you keep it out of shot. And then once you take the profession more seriously, you can get what Joe Rogan has, which I have as well, which is the Shure SM7B microphone here. So let me show you the lights really quickly and a couple of other products to consider ordering, and then we'll move on to other questions you have. Please keep typing them. Okay, Westcott Basics. So you want to search for Westcott Basic Lights, and you can get them here. You can actually get them for about $100, right? Get 1 on each side, okay? 2 come in 1 package, and you're good to go. And then in terms of the backdrop, meaning behind you, if you want, you can put an old lamp as well, not too close to the wall. Take the cover off the lamp to shine the light up the wall. And that's how I recorded my first 20 courses or so. And you probably have most of the equipment already in-house that you need to order aside from lights. Lastly, on sound. What you want to do is you want to make sure that if you're getting an echo, put more furniture in the room. You know, when you go to look at an open house for an apartment you want to rent, quite often there's no furniture and you get an echo. So you can put furniture in the room. What you can also do is you can put these on the walls and on the ceiling. Okay, make sure, and they stick, but make sure to use glue as well if you put them on the ceiling. Otherwise, they could fall. If you have a candle, it could start a fire. And these sound tiles will get rid of the echo as well. And if you have additional questions about how to set up a studio at home, let me know. But I have a great student, PhD student, actually graduated from my MBA program as well last year, named Evelyn from Minnesota. She said, a great Zoom setup can do more for your career than a great Italian suit can. All right. All right. Next up, Hamza. Happy Diwali to you too, Sanjay. Hamza wrote, hi, Chris. Good morning. God bless you and your family. God bless you and your family more. Why does the education system in America suck? We are not taught how to be financially, mentally, or spiritually healthy, rather very systematic. Yeah, it's problematic in America and many countries, actually. So when I graduated from business school in the year 2000, I'm an old man. I went to Columbia University. I did an MBA in finance. I found that I wasn't really ready to start a business or understand how to invest. And the most important concepts are not taught in business school or in universities. They don't teach you in business school how to start a company, that's right. They don't teach you how to present. They don't teach you how to manage your own money. They teach you how to manage other people's money. They don't teach you how mortgage works, etc. And that's why I started my own MBA program. You can check out at this link right here if you're interested. And that's why I wrote this book here as well. The system is changing. I feel like my children, they're older now, but I feel like they're the last generation that feel that they have to maybe think about getting a university degree. The system is changing because of competition from online sources, great websites like Udemy, etc. And I really do believe that 4-year undergraduate degrees will be truncated to 2 years within a few decades. And it will be supplemented with online learning, which is what we do here every single week. And I think that 50 universities will be around in a couple decades. and the rest of them will go under. And I say that because a lot of people are deciding that, hey, a 4-year undergraduate degree that costs $100,000 just isn't worth it unless I get into a great school like a Harvard, Stanford, etc. And so what I think will happen is with many of the top universities in the world, they'll survive. But the others, they'll dip into their endowment and they'll deplete it. And then they'll call all their alumni and try to get a Hail Mary pass to save the school. And then they'll go under if they don't change. Now, Jensen Huang, who's the brilliant founder and CEO of NVIDIA, this is his opinion, and it's controversial. He said that you should not study computer science anymore in school. And his rationale is that AI is perfect for that. So what should you study? Well, Jensen Huang argues that the American educational system will pass the rest of the world in the next couple of decades. And the reason he said that is because in the United States, unlike other countries, quite often when you go to university, you do not declare a major until your second or third year. And so you study the liberal arts. And Jensen argues that by studying the liberal arts, it kind of forces you to be creative and think outside the box. And if you think about the late, great Steve Jobs, he would always say that Apple lives at the intersection of technology and the liberal arts. All right. Next up, Shahar. Good to see you. Oh, one more thing I want to say about the American education system. So when I worked in venture capital during the evenings, I was a professor at a couple of MBA universities here in the Bay Area. And I learned something about American students. And keep in mind that 50% of all students, at least the ones I taught live here in the Bay Area, 50% were born overseas. But I learned that American students, regardless of where they're born, but American students are number one in the world in the most important economic category that nobody talks about, which is confidence. And with confidence, you can sell. With confidence, you can take something really boring like cloud computing and make it sound awesome, kind of like what Mark Benioff does. And for one of my big corporate clients, I was presenting recently. I was teaching them how to present. Because I've made every mistake there is presenting in the world, I can now teach it. And I asked them for feedback on who they buy from. And they said, senior executives at this company, it's a big tech company here in the Bay Area, they said that they decide what product to buy based on the confidence of the presenter while that presenter is presenting. And so confidence leads to perceived competence. And the best thing that a teacher or a parent or a boss can instill in their students, clients, subordinates, etc., is a sense of confidence. Because with confidence, you can do anything. And we are always our own biggest enemies. Whether or not you think you can do it, you're right. And the way to become confident is to cut off everybody in your life that brings you down, or don't listen to them. And change your perception too. It's like the Rodin sculpture, I think, therefore I am. And I can talk more about how to boost confidence as well if you'd like me to later. Yeah. All right. Shahar, great to see you. Moving on to Joshua. Hey, Joshua, who wrote, hey, Chris, for a real estate investment fund, would you recommend recruiting a board before deal acquisition? And how much founder equity would you offer to the chairman and the board members? Yeah, you don't have to give any equity to the board members, and you don't have to compensate anybody on the board either. So the way it works is for private companies, a lot of times the board members or board advisors or board observers, which I'll explain in a second, a lot of time the people on the board, they join, but they're not getting paid. And the reason they join is because they represent their investors. They probably invested in the fund itself. And so they have a fiduciary duty or a fiscal responsibility to report to their investors how your fund is doing or how the startup is doing. So you don't have to compensate them. For publicly traded companies, it's not uncommon for people that were former CEOs to make 6 figures while being on the board. Now, there's 3 types of board members, and this is really important for everybody to know because there's litigious issues. If you're a board observer, it means you invested in the company, but you don't really have a say in terms of voting whether the company should do something. If you're a board advisor, it's not a legal thing at all. You're just kind of like an advisor. But if you're a board member, don't ever join a board as a board member unless the company that asks you to join offers you what's called D&O insurance. That stands for Director and Officer Insurance. Otherwise, what could happen is if shareholders sue the company, they can sue the board members. And the D&O insurance should be paid for by the company and not by you itself. Yeah. And in terms of recruiting board advisors for your startups, what I recommend doing is this. Think about your startup, okay? And think about where the gaps are in your startup, or think about what investors think your weaknesses are. So let's say you're starting, a search engine company, and investors might think, I don't know if this person has enough experience. Well, you can set up a ton of informational meetings, which I teach you how to do in my programs. Set up a ton of informational meetings leveraging LinkedIn with people that work at Google. And during those informational meetings, ask them to join your board as a board advisor. And you'll be amazed how many people say yes, because they want to help you. And also it looks good on their resume. Think about it from their perspective. Then what you can do with their permission is on your slide deck, on the second slide, you can have kind of an Olympic ring set up for your management team as follows. 3 people on the top, okay, that's you, your co-founder, maybe somebody else, and then 2 advisors on the bottom, one from Google, for example, with the Google logo, if you get their permission, and one from another company with their logo as well. And that will assuage investor concerns about any gaps you might have in your skill sets or go-to-market strategy. All right, moving on to Joshua, who wrote, how much equity would you offer each position? How would you structure the board for the real estate industry? Yeah, so generally speaking, when you have a board, you want to have an odd number of board members. And the reason is because quite often the board can vote. And if there's an even number of people, like 8, 4 vote yes, 4 vote no, you've got gridlock. You want an odd number. You also want to talk to your lawyer, not me, I'm not a lawyer, in terms of the paperwork for these board members, for example, to sign. When it comes to compensation for C-level executives, usually the way it works is when a company is first founded, and I'll use Facebook as an example, or Meta now. This is the S1 from 2012 when they went public. But Mark Zuckerberg owned 100% of the company initially. Then he owned less and less and less. And every time you raise capital, you obviously give up a part of your ownership, but you're worth a lot more. But what you can do is you can actually get the voting rights if you're an unbelievable startup like Facebook. This is rare. But on the cover here of the offering memorandum, it says here that after the IPO, Mark Zuckerberg will hold 57.3% of the voting shares of the company, even though he owns way less than 50% of the company. So with respect to how much do you give to employees when they join you, when I sat on the boards of companies, in the A round and B round, if it's a C-level executive, you can give maybe up to 5% to bring on a CFO or a CTO, and usually less than that actually. Usually the founder or the founders own the entire company, and then eventually when the company goes public, which is very rare, then they might own 10% of the fund in general. Now, when you recruit employees for your startup or any company in general, you want to give them golden handcuffs. And what that means is this. You give them options in the company. And it costs you and it costs public companies nothing to give options. It's a non-cash expense. And the way you do it is as follows. You give them stock options at a certain low price, but they can't cash it in, meaning they don't vest. They can't cash it in for 4 years. And you give them options every single year. And if they ever want to quit, they're leaving money on the table, hence the name golden handcuffs. Last thing I'll say on this is when you join a company, if you're given the option of either getting cash or stock options, try to get as much cash as you can, right? Don't say you don't want any options. Otherwise, they might think you're a flight risk and not serious about the company. But in the unlikely event that the company does exceptionally well, they're going to give you more options anyway because it's not a cash expense for them. All right. Next up question is, what is your opinion on Patrick Devine's philosophy for navigating through legal and financial systems? Is his work legitimate? Yeah, I'm not sure who you're talking about. Is he from Hindenburg? I don't know, but I will talk about Hindenburg because I'm sure a lot of people are curious about this. So SMCI, which is a server and a server software company, its shares are down 20 to 30% today. And the reason is because the auditor, Ernst & Young, resigned. And they resigned because they're not comfortable with the accounting processes and procedures of the company. And don't ever, and Hindenburg actually came up, it's a hedge fund, came up with a short thesis on SMCI. So they're making a killing today. But don't ever invest in any publicly traded company if they don't have a well-known auditor. The same thing for private companies too. Make sure it's an auditor you've heard of, like KPMG, Ernst & Young, etc. With a lot of these crypto companies that have gone belly up, and you know exactly which ones I'm talking about. Search for the names of the auditors. They're no-name auditors. All right. Next up, Ro wrote, Chris, I don't feel like watching Billions till you complete explaining all episodes of all 6 seasons. Thank you. I will. I'm through the third season right now. I will do all 6 seasons. I love the show when Michael Prince joined, but just a tiny bit less. And I heard a rumor, actually, that there's a couple spin-off shows coming. I can't confirm this. One of them might be called Trillions, based in Miami. Another one called Millions, based in London. But I love to teach using popular culture. And for those of you just starting your YouTube channel, the best advice I got was there's a guy who partnered with Mr. Beast. And he actually wrote an amazing book on YouTube, and he coaches people. And so I applied to be in his coaching service, and actually I was accepted. And I took his service. And one of the reasons why my YouTube channel is growing more now, and I don't pay for growth ever, I'm doing everything organically since day one. But one of the reasons my channel is starting to grow now, more so, is because of I do these videos on Wall Street Pro reacts to the movie Wall Street, Wolf of Wall Street, Billions, etc. And I got the idea from this guy who does, I think his name is Legal Eagle, and he does it with law shows. And you can do this as long as you keep the clips usually less than 10 seconds or so for educational purposes. And as long as you don't say anything untrue about the show or degrade anyone. But popular culture helps you tremendously with the YouTube channel. Okay, let me show you what I mean here. All right, so let's go to YouTube, Legal Eagle. Okay, here he is here. Oh my God, he's getting huge. All right. So this guy was trained by the same guy I'm getting trained on now, the consulting firm. And Legal Eagle, what he started doing, and whenever you start a company, you always got to think about a massive total addressable market. What he started out doing was he had this YouTube channel for the LSAT, right, which is the a standardized test you have to take to get into law school. Now, the total addressable market of that is this. And then he changed his strategy to focus on all law topics from movies, etc. And his channel blew up. And so I got my inspiration from this guy. I think he's fantastic, and he's way bigger than I am. But I've seen a lot of growth recently because of this and because of YouTube Shorts. And hopefully in a couple of weeks, I'll be at 100,000 subscribers. And when I do, I'll thank you all from the bottom of my heart for the hard work we've all put in over the past 6 years or so. Thank you for that comment. All right, McFlash has got a question. And dude, I love your image, your icon. That's an image. It's tiny, but I can tell it's when Bill Gates got arrested when he was in the 1970s living in Albuquerque for driving too fast. Yeah, very funny. But your question here is, what industries are the best to start a business in without much capital? Yeah. So I would say don't ever start a company where you're going to make a physical product. And the reason I say that is because inventory can destroy your company. And that's what happened with the video game sector in the early 80s. The entire video game sector went belly up in 1983 because Atari produced too many games they made a game called E.T., which was brutal. And they made way too many of these things, and they had to bury them in the desert. So inventory can destroy you. And it wasn't until later on that decade when Nintendo came in and revitalized and just took over the entire market. So I would say if you're going to create a product, do what Michael Dell did, which is this. Have your customers pay for the product, then make it, and then ship it to them. Otherwise, make a virtual product like I've done, right? I've done a lot in software, etc. But you don't need capital to start any business. You don't even need to have a product. All you have to do is have a proof of concept, which is called an MVP, minimum viable product. And then what you can do is you can get high net worth investors to invest in your company. And I've humbly raised and managed more than $1 billion in my career. And in my MBA programs and courses and consulting services, I help my students scale their business and raise capital. Now, when you raise money for your business, don't ever ask friends or family. Because I promise you, and it's happened to me before, I've made my friends plenty of money, but I have one friend in particular that lost money, and he knew the risk going in. And it can ruin your friendship and your family life too. Don't ever ask a bank either, because banks are chicken. If you miss one payment, they can take everything. So who do you ask? Well, don't ask venture capital funds initially because the sales cycle is very long. You'll get the meeting, but they won't invest right away. You want to ask high net worth investors, right? Always ask the decision maker because they can invest within a couple of weeks. Yeah. All right. And when if you're thinking about starting a company or investing in any company, period, always ask yourself the 5-year question, which is this. In 5 years, will this company or this sector be more relevant or less relevant than it is today? And that will help you see the forest from the trees. And when investing in stocks, that will stop you from getting seduced into buying value traps, meaning stocks that are cheap for a reason. So always think longer term. As Warren Buffett said, the longer the view, the wiser the intention. All right. All right. And then LOL. Good to see you. Welcome to the channel. I hope you join us again. Wrote, how do you know when to give up? I'm a Web3 developer, and I only earned $5,000 USD last year. Should I quit and try something else? No. So, a couple things. With my kids, the second they were born, I would say to them, you never, and immediately, even today, they're in their 20s, the two older ones, you never give up. I also say to them, you always finish, and they say, what, you start. Yeah, you never give up. You only have to be right in business one time. If you look at the best authors of all time, you look at J.K. Rowling, Agatha Christie, C.S. Lewis, John Grisham. They were all rejected by dozens of publishers, but they kept at it. They were like a pit bull on a pork chop. They never gave up. Again, you only have to be right in business one time. And you have to be comfortable with failure as well. Failure is a badge of honor. Just keep trying. And the best entrepreneurs in the world, like Elon Musk or Richard Branson, etc., they've all failed more times than you and I have combined. But they're different from a lot of people because they're not emotional and they just don't care what people think of you. And we got to develop the same mindset. We got to tell ourselves, I don't care what people think of me. Now, in terms of giving up, it might be something to do with your process. And the definition of insanity is doing the same thing over and over and over again and getting the same results. So maybe I would try a different process, so to speak. And if you want, what you can do is share more with me about your Web3 business model or programming skills or consulting business, and I can provide you with real-time feedback. Yeah. Last thing I'll say in this is this. You have to be passionate about it. Yes, money's important. We have to pay for things. I get it. But it can't be about the money. It's got to be about passion. And if you don't care what people think of you and you chase your passion longer term, you chase your dreams, something beautiful happens. Your dreams come true and the money follows accidentally. It always does, as long as you're willing to never give up and fail over and over and over again. However, if you chase money for the sole purpose of making money and you're not passionate about what you're doing, you'll lose your money and your dreams. Okay. All right. Next up, let's do a system check. Okay, cool. All right. Next up, Sanjay wrote, thanks to you, I'm part of your MBA Gold program. Awesome. I wrote a book and published it as well. Awesome. Awesome. And it helps you so much with your career when you publish a book. It really does. And it's free to do. Anybody can do it. I own this. I self-published it. Nobody else did. And then when you go to informational meetings and interviews and meetings with customers or potential customers, you can give them your book. Who does that? And if you think it's too much work to do all this, ask yourself, and I say this with love in my heart as always, how badly do you want that job, customer, etc.? It works. The harder you work, the luckier you get. And Sanjay, thank you for that. And I'm honored to have you in my gold MBA program. Yeah. All right. Next up, Willow Whale wrote, what's the difference between option futures and regular futures? Yeah. So let me talk about the derivatives market first. So the derivatives market is 6 times bigger than the global stock market. And derivatives from calculus class, which I've never used, derivatives means the rate of change. And under the derivatives umbrella, you have a bunch of different instruments in different categories where you make money based on the rate of change. There's options, futures, swaps, etc. Now, options is when you bet on a company going up or down with a small amount of money. And you can think of that as being like an insurance policy. You know, for example, where's my Coke prop? If I own a ton of shares in Coca-Cola, ticker KO, and let's say I don't want to sell those shares, but I think the stock might go down. Why do I not want to sell the shares? Because maybe I'll pay a lot of taxes on it. What I can do is I can buy an insurance policy on Coca-Cola. And so you buy what's called a put, which is a small amount of money. Okay. If Coke goes down in a certain amount of time, you make a lot of money. If Coke goes up, all you lose is this. Hi there. You can also buy calls. And calls are similar to puts, but the opposite. You pay a little bit of money. And if the underlying stock goes up, you make a lot of money. If it goes down, you just lose this amount. Yeah. So hopefully that summarizes the futures market and options in general. But you can do futures, not betting on commodities. You can also use futures to bet on, the currency prices. And a lot of big companies will use this to hedge. So for example, Southwest Airlines, ticker LUV. Back in 2003, the brilliant CFO of Southwest Airlines, who eventually became the CEO, the brilliant CFO, what he did was this. When oil was $30 a barrel, he thought oil was going to go up a lot in the long run because China had a voracious appetite for natural resources. And so what Southwest Airlines did from a futures perspective was they locked in the price of oil at about $30 for the next decade or so. And then what happened, a lot of people don't realize this or remember this, but in 2008, there was an oil supercycle and the price of oil went up to $150 then. It's crazy, I know. And what Southwest did was they got to buy all their fuel, their jet fuel, their oil for only $30 a barrel. And so they did something predatory, which was they cut prices. And that, along with the poor economy, forced a lot of the U.S. airlines like Continental, Delta, American Airlines to go into bankruptcy. So that's how you can think about using futures when it comes to protecting a commodity position. A lot of companies will also do that with FX, foreign exchange. Okay, give me 1 second here. Okay, cool. All right. Next up, Fred, how are you? Fred Mendoza. Fred graduated from my platinum program several years ago. Great to see you. He once met Dr. Fauci. I remember during COVID, you worked in the healthcare industry, and I think you're based in the DC area, but you invest in a lot of real estate in Florida as well. I love real estate investing, and for everybody in my MBA program, my real estate elective is coming out next month. Yeah. So Fred wrote, I work a lot with World Bank IMF employees here in Washington, D.C., cool, from all over the world. Did you have colleagues who went to work for the World Bank /IMF? They seem to be at the top of their profession. Yeah, when I went to business school at Columbia, I think a couple people went to go work at the IMF, World Bank. I don't know that many people in that area because when I worked on Wall Street at Goldman, hedge funds, etc., I was more focused on stocks and less so the macroeconomic stuff. Yeah. Okay. Center of the board. I love it. Wrote, hey, Chris, What do you use to tell if a stock is underperforming or overperforming? Yeah, I use, and I am sponsored, okay, I have put that out there, but by SeekingAlpha. But and if you want to get a discount on SeekingAlpha, and this is the only company that's sponsoring me, I won't let anybody else sponsor me. But if you want to get a discount on SeekingAlpha, what you can do is go to the description of this video and sign up. But I love to use SeekingAlpha, and what I do is I analyze the technical analysis. And let me just go full screen and tell you that in more detail. Okay, so there's something called the Relative Strength Index, or the RSI. And it kind of measures whether or not a stock has gone up too much in a short amount of time or gone down too much in a short amount of time. And I am longer term focused. I don't believe in day trading. But if a stock has an RSI, meaning Relative Strength Index, of around 20 or 30, it might be oversold. Okay. In that case, you might get mean reversion or a dead cat bounce. And you could see the stock start to work for you. The same thing with the RSI is 70 to 80. It means it's overbought. And in that case, the stock could consolidate a bit lower. It could happen. Yeah. Now, I don't like to look at technical analysis until I've looked at fundamentals and valuation first. So let me show you my investment philosophy. And this is one of the many templates I provide my students. Give me 1 second, guys. I'm so sorry. Hold on. Okay, good. This is one of the many templates I provide my students in my MBA degree program. But when I analyze a stock, one of the last things I do, you can see right here, is technical analysis. I look at 100 different drivers, okay? And this is available to all my students as well in my MBA programs. But I look at qualitative research, quantitative research, financial research, okay? And then what I do is there's 100 steps here, and I give this to my clients. I answer 730 questions based on these 100 steps. Technical analysis comes right at the end. And what comes out of this are three things. Number one, a one-page report. Okay. And on the one-page report, this is just dummy data here. But on this one-page report, we've got fundamentals, which I look at first, then valuation, then technical analysis. And you can even print this out on a one-pager to bring to your interviews or put on the back of your resume if you want to. The other thing that comes out of it is a detailed report that's 100 pages or 150 pages or so. And then also, and again, this is just dummy data, but based on your inputs, you get a ton of charts, or chats, as they say in South Boston. So this is how I analyze companies. Technical analysis is important, but it's one of the last things I look at. I always start with the management team, because what is a company? It's the quality of the people that work there. Something they don't teach you in business school. Other things you can analyze from a technical analysis perspective to see if a stock is going to see a dead cat bounce or consolidate lower is you can look at the 50-day and 150-day and 100-day moving averages if you want. 200-day moving averages, 50 and 200. I just had a senior moment there, folks. The older I get, the better I was. So you look at the 50-day moving average. If the stock keeps bouncing off the 50-day, this could be a good support level. Same thing with the 200-day moving average. Now, if the 50-day moving average moves up through the 200-day moving average, that's called a golden cross, and that's very bullish, and vice versa, it's called a death cross. You can also look at channel formation as well. But make sure you always look at fundamental research, okay? And then valuation-based research, and then technical analysis last. And a lot of people are upset with me for saying day trading doesn't work. What I mean by that is day trading, like trying to make money every single day. You can use technical analysis with swing trading longer term, though. Yeah. After you look at fundamentals and valuation. Yeah. And when Warren Buffett buys a stock like Coca-Cola, he bought around 1990, which he still owns today. When Warren Buffett buys a stock, he always says to himself, I'm assuming the market's going to be closed for 10 years after I buy this. Obviously, he knows the market won't be closed. But the longer the view, the wiser the intention. And we've all made the cardinal sin, all of us, myself included, of course, of selling a stock because it went down. Doesn't make sense, right? You know, Warren Buffett said that the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. What I want us all to do, though, is be long-term focused, because we always freak out at the worst time. And just take a look at a stock that you sold in the past because you freaked out because it went down. There's a good chance it's higher now. There's a bunch of them like that, right? Take a look at the S&P 500. Okay, it looks like this over time. And if you panicked when the market, actually peaked in 2008, You panicked. You'd be way down today. Same thing in 2020, same thing in 2001 after the 9/11 pullback, etc. Just be long-term focused. The longer the view, the wiser the intention. You'll sleep better at night as well. I promise you that. And interestingly, with Coca-Cola, if you bought Coke day one in the IPO, you would be down 50% 1 year later. But if you held on longer term after you've done your due diligence, obviously you've done incredibly well with it. Yeah. And if you're not sure what to buy, what I do, and I'll never tell you what stocks to buy, okay? But what I do when I'm not sure what to buy is I just buy the VOO, ticker VOO, which is the S&P 500 ETF. Now, Goldman Sachs is pretty bearish on the markets. They're saying they expect the markets to be only up, a couple percent per year. I'm bullish, okay? I'm more optimistic because of AI. So I think over the next 20 years, the market's going to be up an average of 15 to 20% per year. Yes, there will be down years as well. And the reason I say that is because a lot of companies are materially cutting expenses right now, leveraging AI. They won't hire as many people in the long run as well. So if they cut expenses leveraging AI, it goes right to the bottom line. And companies are using AI right now to cut expenses. Soon they'll be looking at AI to grow revenue. And that's something I'm looking at closely as well. Yeah. So it's incredibly bullish longer term for the markets, in my humble opinion. All right. Okay, next up question is, who do you think is more sensible when it comes to developing and releasing better products between Microsoft and Apple? I would say without a doubt Apple. Yeah. Apple, I mean, you don't need an instruction manual to use any Apple product, right? With Microsoft, you need to use F1, I'm dating myself there, or help menus, etc. But Apple makes much more intuitive products. And when it comes to software, it's the same thing. I mean, when I edit my videos, and I edit all my videos, except my shorts, but when I edit my videos, I use Apple's Final Cut product. It's easier to use than any software product made by other companies, including Adobe's Premiere Pro. So I would say Apple, easily Apple. And Microsoft has so many failed products over the years, way more than Apple does. And you can do a look. They had this awful phone years ago, which lasts on the market for like a month or two. They had the Zune, which tried to compete with the iPod, etc. Yeah. Although I do love Satya Nadella. I think he's one of the best CEOs on the planet because he started Azure, which is now slowing down. That's why Microsoft's down 3% today. Yeah. All right. Moving on to Peter C. Hey, Peter. Peter wrote, what type of suit would you recommend for a hot climate in nations like the United States and Australia? Also, would you agree that the era of mandatory business tie is dead? Yeah. So when it comes to time to an informational meeting, if you're not sure what to wear or an interview, you can always go to the LinkedIn profile to see what the people at the company are wearing. Or what you can do is what I do, which is this. I wear a tie. I get there early. And then what I do is at the front desk, I'll ask, do they wear suits upstairs in the office or not? And if not, I just put it in my pocket. Yeah. In terms of a suit, yeah, I don't know. You can get good Xenia suits. They're kind of pricey. You always get them on sale that are pretty thin. Just don't get linen ever because they wrinkle really fast. Yeah, but I do think that the tie is going to be a thing of the past, but it will be worn at special occasions. And the tie, which is cravate in French, it was actually created. I think it was created by the Croatians years ago. It's kind of a funny thing, though. It doesn't make sense, and it chokes you. I hate it. Ugh. All right. Next up, Sanjay wrote, and you're launching a YouTube channel. In my channel, I predict MMA fights, which is a great business model, MMA that is, because I don't have to really pay any high-priced celebrity except for Connor, and that's it. On my channel, I predict MMA fights. Also, while doing a live, if no one shows up, what should we do? Like a script, meaning should we just talk? Yeah. Oh, yeah, always have a script. So with my YouTube channel, I'm so sorry for making everybody dizzy here, changing screens. But with my YouTube channel, if you go back, and you can get this on my website, yeah. But if you go back to my earlier days, and that's my little sister, Elizabeth. And this is my son Dylan. This is Webcast 48. I was in Barcelona here. But if you go back to my earlier ones, you'll see I had no idea what to talk about, right? And so I just kind of had just a basic script. Yeah. And I brought a lot of props as well, as you can see. And the reason I brought props when I was younger, 6 years ago, whatever, the reason I brought props was so that, just in case there's no questions, I have something to talk about, right? So I have this prop here to talk about if nobody has questions today. For example, it's a different football. And this prop says broke, and it's NFL football. And if I want to talk about personal finance, I can say this, which is true. So over 70% of people that retire from the NFL are broke within 2 years. Let's talk about personal finance, etc. But even today, now, I have a bunch of things to talk about just in case nobody shows up. Okay, so those things were how to detect lies in business, how to publish controversial content, how to start social media using AI, and how to write a book, etc. Yeah, but you can watch these older ones here, and you'll see that I do have a script. That's when I was younger. Yeah, it's been a long road, folks, but fun. And I've made every mistake there is to make with YouTube and online stuff, so you can always learn from my mistakes. But I've had fun too. And I will do this weekly call till the day I die in 200 years or longer. All right. Next up, Sadiq wrote, "Hey, Chris. Hey, I've been working for over a year at Deloitte, India, great company, in the valuations team. The work pressure is overwhelming here, and they don't even offer great pay, especially the variables, unlike bulge bracket firms like Goldman, etc. I'm planning to move into investment banking for 2 reasons. Number 1, I feel the IB, investment banking team, drives the deals and transactions. Number 2, they offer great pay. Any suggestions would be appreciated." Yeah. Look, working at Deloitte or an accounting firm in general, or consulting firm, is the best place to start a career. And the reason I say that is because accounting and finance, they're not intuitive. It's not common sense. You got to learn the basics. So you've cut your teeth learning there, kind of like when I worked at Accenture years ago. I kind of cut my teeth on consulting there. If you're ever confused, and this goes to everybody in this call, if you're ever confused of what industry to join, I want you to focus on joining an industry where you're originating the product, meaning getting an origination job. I'm going to give you 3 examples. The first example is investment banking, where you're originating or creating the IPO product or M&A product, so to speak. Okay? And there's a point to this in a second. The second origination job you can get is working consulting, like a firm like McKinsey, which rejected me, but I worked proudly at Accenture. Work at a firm like McKinsey, where you're creating the corporate strategy. The third origination job, or threeth, as my son Andrew used to say, is you can be a developer. Work at a company like Google creating the product. Now, if you hate originating all 3 of those aforementioned products, that's okay, because you're more marketable now. You can move on to sell those products in a sales role, or operations, or do your own startup, or manage people, etc. Now, when it comes to investment banking, a lot of people want to join it right out of undergrad, including my son, who's obsessed with it. He reminds me of myself so much, yeah, except he's good looking and smart. But you got a lot of people want to do investment banking initially because it sounds prestigious and because the money is good. But don't figure out how to get that job until you answer yourself why you want that job. A lot of people go into investment banking and they think it's prestigious and they make a lot of money. But you know what, dude? They make the same amount of money per hour that their buddies do, but their buddies are only working 40 hours per week. They're working 100 hours per week and they hate it. Make sure you're passionate about finance if you want to do that. Now, in terms of how do you get that investment wanking job? I'm so sorry. Okay, look, it took 49 minutes until I started my awful dad humor. But how to get that investment banking job? It comes down to networking. It's like any job. Because every time, this goes to everybody in this call, every time you see a job opening online, you literally have a 1 out of 250 shot of getting that job. So who gets the job and how do you get the job? Well, the person that ultimately gets hired knows somebody at the company. So how can you get to know somebody at the company? Well, you can sign up for one of my courses, see the link below, where I teach you how to network on steroids and leverage LinkedIn and make the best LinkedIn profile ever so you can get a ton of informational meetings. When you want to work at a company, you have to set up 30 or 40 informational meetings with people at that company. And if you do that, and I promise you, you can do that if you keep trying, then I promise you it's only a matter of time until you get that coveted investment banking job. And I explain how to get these informational meetings and how to network in my program. See the link below. Yeah. Okay. And make sure whenever you show up to informational meetings or interviews, you bring a one-page write-up on something that could help that person. What does that mean? Well, in business, people are usually motivated by three things. Number one, they want to make more money. Number two, they want to get promoted. Number three, they want to enjoy what they do. So how can you help them with one of those three things? Create a one-page template on, say, a stock or anything. And I have one-page templates for every single sector. So for example, let's say, let's see, is my PowerPoint open? I don't have PowerPoint open, but I have a ton of write-ups in PowerPoint. But you can also look here at, let me go here, sorry guys, create a one-page write-up. So for example, a one-page write-up on a stock, this is just dummy data here. Put this on the back of your resume, okay? And I have one-pagers set up, templates for you for every single sector, okay? Every sector, including operations, etc. All right, so let me see if I can find an example here. All right. Yeah, for say human resources, you can even create a one-page write-up, right, for somebody that works in human resources, and you can create a one-page write-up which kind of highlights some cool apps or different ways to, I don't know, be more efficient in HR, etc. Yeah. All right. Let me get back on track here. It's fun doing these things live. All right. Okay, and JK wrote, I listen to Legal Eagle often. He's great, man. He's one of the best YouTubers out there. I love his stuff. Yeah, he inspires me. Okay. All right, Ed Duan wrote, what happens when you provide investors with stock options? Yeah, you probably mean employees, right? In the 4 years, as you mentioned, expires, but the company does not have the cash flow to pay it out. Yeah. So when you join a company, quite often you're given stock options. And the reason you're given stock options is, again, it's a golden handcuff to stop you from leaving. You're given stock options every year, and you can't cash them in or vest them until 4 years from now. But it's not a cash expense. It costs the company nothing to give you the options. And that's why whenever you look at an annual report, and later on this year, one of my amazing students, who's a former investment banker and CPA, Gary, one of my amazing students, Gary, and I, we're making a forensic accounting course, which is going to be coming out for everybody to access, including MBA students. But you have to look, you have to go through the options in the footnotes very, very in a lot of detail, because it's not a cash expense. It's like depreciation. It's funny money. Yeah. So if the company doesn't have enough cash to pay it out, it doesn't matter. Because the employee that got those stock options is probably not going to want to, they have to still buy the stock at a low price, strike price. They're probably not going to buy those shares if the company's going out of business, right? So stock options means you have the right to buy a stock in the future at a very low price, right? It's not like you're given the shares. Yeah. You still have to buy them. All right. Oh, Vinny wrote, hey, Chris, it's Justin here. Great to see you. Okay. And then LOL wrote, I'm clipping this. Thanks for your honest opinion. You're always welcome. Yeah. And I'm completely transparent with everything. Yeah. All right. Moving on to Malik. Hey, Malik, first time seeing you on the call. I hope you join us again. Malik wrote, what are your thoughts on day trading? Is it a lower probability game because the big banks and institutions aren't really building positions on small time frames? Yeah. Yeah. So I say this with love in my heart. Okay. Please don't day trade. Please don't do it. If you're going to invest in companies, look at fundamentals first, valuation second, and a distant third is technical analysis. Now, swing trading is a different thing. If you're trying to make a little bit of money for fun, when a stock is overbought or oversold. But don't do that on a daily basis, please, please. Because what happens is stocks move up and down in a very short amount of time because of random reasons. Things that we can't predict. For example, Taleb, who's the best finance author in history, it could be a black swan event that makes a stock go down or a market go down. Black swans are very rare, except in New Zealand and Tasmania. But a black swan could be something like 9/11 or COVID, for example. You can't predict it. Or it could be, I don't know, a research report by Hindenburg, a great hedge fund that short sells, on SMCI that pulls down other semiconductor stocks, or tech stocks in general, I should say. You can't forecast that. You got to be long-term focused. Just you'll sleep better at night too. It's kind of like going to a casino. Let's say I walk into a casino for the first time ever, and I put, I don't know, $100 on in roulette, and I win. That's not repeatable. The worst thing that can happen is you make money on your first day trade. It's not repeatable, I promise you. Just try to be longer term focused. And I say this with love in my heart because I care. Yeah. Okay. Yeah. All right. All right, moving on to Michelle, who wrote, "Hey, Chris, so good to see you. Great to see you as well. It's been a while. Hope you're doing well. Blessings to you and your family likewise. My granddaughter and I want to get a gaming setup. She is 7 now. What do you suggest?" Yeah. So for a gaming chair, so my kids have them as well. What I recommend is go to Best Buy, if you have Best Buy where you live, or a consumer electronics store, and try them there instead of ordering them. Yeah. And they make smaller customized ones as well, if you want. Yeah. You can get the whole package if you want directly from Best Buy. Yeah. But do not create your own computer. Yeah. Not at that age, if you're a granddaughter, from scratch, because you can start a fire. Yeah. Which I've done many times with many computers I've built for mining, etc. Yeah. I have to let you all know, okay, I'm pre-announcing here. When GTA 6 comes out, you ain't going to see me for a month. Okay. Screw this webcast. I'm going to be playing GTA day and night for an entire month. And I don't care about anything else when it comes out. If it comes out. Yeah. All right. Or what you can do is just buy her a Switch. She could take it anywhere with her. Yeah. All right. And yes, I am playing the new Zelda game and I love it. All right. Next up, Iha wrote a quick question. Sure. How can you hedge oil prices for D and then Alt-A? Or who would take the counter risk for such a time span? Yeah. The opposite side of any derivative investment, it's not just somebody trying to make money. It's somebody trying to hedge their risks, right? So let's talk about FX. So let's say that you want to lock in the US dollar versus the euro at a certain price. Because, I don't know, you're a US company and you want to make sure that your overseas revenue is consistent with the dollar. So you make that bet or investment. Well, the market maker is finding somebody on the other side. Maybe it's a European company like SAP that wants to lock in the dollar relative to the euro. Yeah. So and the reason, so derivatives as investments, the derivatives market is 6 times bigger than the global stock market, mainly because people, they're not just trying to day trade. They're trying to hedge themselves. It's like an insurance policy. Yeah. Okay. Next up, Sergio wrote, I have 1 year experience working in financial services in Luxembourg. Any advice on how to direct my career to be an investment analyst at a hedge fund? Yeah. So what I recommend doing is networking and doing lots of investment write-ups, okay? And bring these investment write-ups when you go to these meetings. So for example, as I mentioned earlier, this is one of the many templates I offer in my programs. And this is dummy data, bring these 1-page write-ups with you. So networking is key. I promise you it works. Your network is your net worth. Relationships are more important than product knowledge. Do an advanced search in LinkedIn. Find people who have something in common with you that are maybe from Luxembourg that work at hedge funds, and set up informational meetings. It's the only way to get a job in that market. Yeah, because they don't advertise for jobs usually. All right. And Center of the Board donated $5. Thank you so much. That donation is going to go directly to the schools that I built. Okay, so I use the money from what I do to build schools. And I completed a school in Rwanda. We're building one now in Kenya. My goal is, and we just started, I went there last month, but my goal is to build 1,000 schools in Africa in my lifetime, right? So that will go directly to there. And then we did Rwanda as well. And if you work at a company and they want to make a donation, please come to this website, Kenya School for Girls. Thank you. All right. Yeah, and thank you so much for that donation. So Center of the Board wrote here, I bought your courses on Udemy, and I'm going to get the MBA Silver membership. Is there an options market for futures? Yes. Am I an expert in futures? No. Do I cover it in the MBA? Yes, but not in a lot of detail, and thank you. And for those interested in joining the Silver MBA program, you can always go to this web address here. Thank you. And thanks again for the donation. God bless you. I appreciate it. That'll go directly to Charity. And my wife's name is Charity. That was not funny. Awful humor. Oh my God. 20 people just left the webcast. No, it'll go directly to Marin Koros in Kenya. Thank you. All right, next up, Ian wrote, can you recommend some books that you've read and became successful in life? Yeah, absolutely. So the first one is Dale Carnegie's book, How to Win Friends and Influence People. You have to read that. Without Dale Carnegie, there would be no motivational speakers out there that do exceptionally well. He's incredible. He's the grandfather of the industry. You can also read another book by Dale Carnegie called How to Stop Worrying and Start Living, where he teaches you how to live in day-tight compartments. Yeah. Another book, and I don't read books, I listen to books. You know, for example, Alexa, read my book.
Resuming the Promised Land from Audible. There's about 42 minutes left in this chapter and about 1 day, 4 hours, 57
Alexa, Alexa, don't ever talk to me again. Sorry.
I'm not quite sure how to help you with that.
Alexa, I'm so sorry. I love you, but just stop talking. Yeah. I listen to all the books. And what I do in the mornings when I get ready is I listen to books. I also listen to the news. And I use Alexa for this. And she hates me right now. But what I do is I'll say, Alexa, what's the Wall Street Journal news? And she'll give me the news in 5 minutes. Or I'll say, Alexa, what's the finance news? And she instantly tells me the news from Bloomberg. So this is how I consume media in general. In terms of other books, there's a great one here called Give and Take that I love. And I'll summarize this book for you quickly. The most successful people in the world, the richest people in the world, are givers. Okay, the top 1% of people in the world are givers. And they give because they want to help people. I mean, not all billionaires are bad. Most of them are good. And most other people are takers. So if you have that mentality in life, and this has served me well humbly, if you have that mentality in life of wanting to help people and being a giver, what happens is if you give, you'll receive. It's prophetic. It's been true since the beginning of time. You got to give with your heart, though. And when I say give, I mean give your time. Not just your money, but your time as well. You know, help people. I've mentored so many people over the years when I worked in big companies. And when one mentors, two learn. Yeah. So Give and Take. That's another great book. Let me think other books to recommend. I had the number one venture capital professor in the world. No joke. His name is Ilya Strebulov on my webcast a couple of months ago. And he has this great book called The Venture Mindset, How to Make Smarter Bets and Achieve Extraordinary Growth. And if you want to watch a replay of that interview, you can do so. Just go to my YouTube channel. But Ilya's great. I've guest lectured in his class at Stanford MBA School many times. I mentored a lot of his students as well. but I'll show you exactly where to watch the replay here. Just go to my YouTube channel, YouTube studio here. All right, my channel. And then what you can do is just go here to scroll down to Webcasts. And if you keep scrolling, you'll see a picture of Ilya on the cover, and then you can watch that video. So that's another great book. Aside from that, in terms of my books, I humbly, and this is a Canadian about to brag, humbly, Forbes called this book of mine one of 6 books that all entrepreneurs need to read right now, along with Stephen Covey's book, Stephen Sinek, etc. Other books of mine. So this is a book that McGraw-Hill published of mine. It's called Finance Essentials. Teaches you everything about finance from scratch. You can check that out if you want to. Aside from that, let me think other books. Oh, what I love to do is this. I love to listen to business autobiographies and biographies on Audible. And the great thing about that is when somebody becomes successful, a biography or autobiography is created for them. And what they do is they share their blueprint for success with you. So those are golden. And it's great because it's not theory, it's real practical stuff. For example, the Walter Isaacson book on Steve Jobs, as well as the one on Elon Musk. Those were both wonderful. I also recommend listening to any book that Sir Richard Branson publishes because he oozes positivity. He'll rub off on you. You'll start talking like him as well and sounding gooder when you speak the British accent. But my favorite book on sales ever is by Bill McDermott. It's called The Winner's Dream. Listen to the Audible version. And so Bill was the CEO of SAP. I met him many times. I exchanged emails with him the other day as well. He's now the CEO of ServiceNow. Great guy. Yeah. And I'll bring him on this webcast one week for an interview as well. Yeah. All right. Next up, Albert wrote, I don't have a background in coding, but I do have a background in finance, and I want to break into the quant trading world. Do you have any advice? Yeah. Check out my courses. I teach you how to use Python. I teach you how to use Excel, every feature in Excel, and how to code in Excel, and how to use Python and data frames directly in Excel. I also teach you at this link how to use AI to invest in stocks and other technology topics as well. I'm here to help you. Check out the courses. All my courses and programs have a 30-day, 100% money back guarantee. Yeah. All right. Next up, Manas, great to see you. And Manas, happy Diwali, man. I hope you're doing well. Manas joined my silver MBA program recently, and I finally, after years and years and years of seeing Manas, who inspires me so much in this webcast, I got to meet him as well. I got to meet him because at the end of every one of these weekly webcasts, we do a 1-hour Zoom call per the details below. Great to see you, Manas. Manas wrote, good morning, my dear mentee. Sorry a bit late. No, all good. Celebrations took a lot of time. Great to see you. Great to see you as well. A lot of my wonderful Indian students, which is 11% of my students, are on holiday today. Again, happy Diwali. Festival of Lights. Okay. Ian wrote, can you please review my course on Udemy and review my mistakes? Search Ian Ashraf. Sure. I'm happy to do that. Okay. Ian Ashraf. So udemy.com. Ian Ashraf. Instructor at Udemy. Okay. Oh, you just got started. Okay, cool. Yeah. So for me, let me just tell you, for me, my courses on Udemy, it took me about 6 courses until one started doing well. So you gotta, it's a marathon, not a sprint. You gotta be in it for the long run. Okay. But congratulations on getting started. I'll take a look here. Yeah. Okay. All right. Yeah, you have to market your course yourself, right, to help with the algorithm as well. Like you got to email a link to the course with a coupon, etc., to everybody you know, all your friends, etc. Let me take a look here. The complete Forex trading course. Okay, let me see here the quality. Give me a second. Yeah, for some reason I can't get the volume to work here. I'm assuming it's an issue on my end, not your end, so I can't listen to the audio quality. I recommend being being in on the slides. Like you are the product. I put yourself in the corner. Yeah, that's what I recommend doing. The Complete Forex Trading course. I like the title, Complete Works. I probably sell yourself a bit more. So maybe in brackets, write by, an expert Forex trader, for example, like why you, why now? And maybe in the subtitle, a little bit more about who you are, that sort of thing. Yeah. Takes a while though. But what you want to do is you want to email that course to everybody you know with a discount coupon, just to get the ball rolling, so to speak, so you can establish some sort of social proof with honest reviews as well. Don't give up after one course, right? Give up after 20 courses. Yeah. Now, I signed an NDA with Udemy. I know the senior management team quite well, so you'll never hear me say anything about the stock. Yeah, but I do love the company. They're doing great things. Thanks. Okay. All right, moving on. Manas wrote, has the market timed election due next week? The Indian equities are at a 4-month low. Yeah, foreign investors are pulling their money out of fear of tariffs. Yeah, and small governments fear. What are your thoughts? Yeah. So I'm not going to get political, but I will say this. A lot of people I know in the hedge fund industry are pricing in, and this is just what they're saying, okay? They're pricing in a Trump win. Why? Because the dollar is getting stronger relative to other currencies, okay? And also, people are investing in the inflation trade. Why are they doing that? Well, they, not me, I'm apolitical, okay? But many people on Wall Street think that Trump is going to win. And if Trump were to win, what would happen is he would raise tariffs. And that would create inflation. So people are investing in the inflation trade. That would also, make the dollar stronger. Because if we have inflation, meaning prices go up, that means the Fed will have to raise interest rates. That's why the dollar is rallying. Yeah. Okay. But I believe in globalization. We all have to get along. Yeah. Okay, but let me move on. I don't want to get into politics. Yeah. But if I did live in Canada, I would probably wear a red hat that said, "Make Trudeau a drama teacher again." No, I wouldn't. No. Okay. And I went to school with Justin Trudeau at McGill 8 million years ago. And I can tell you all the story of when I met him if you want to. He was a nice guy, but something happened. Yeah. He won with something. Okay. All right, moving on. Oof. Don't ever talk politics in any meeting. And on LinkedIn, never follow any politicians, please. Because half the people will love you. I don't know what half, though. And vice versa, of course. Okay, and then Ali wrote, love your videos, Chris. Keep them up. Hopefully soon I'll buy one of your courses. Thank you. Thank you. Yeah, and you don't have to buy my courses, ask me questions. You can always ask me questions here for free forever. Yeah, I live for this. I love to teach. Okay. I'm the worst salesman ever, okay? Okay, next question from Manas is, how do you decide if an entrepreneur is investable? Like, do they need to be a bunch of people of one guy, or is one guy enough? Also, what's your biggest pass in VC career, which you repented to pass on? Okay, yeah, I'll answer that reverse order. Okay, let's talk venture capital first. So it was January of 2012. And I noticed that a lot of my friends were using Pinterest instead of using Facebook, etc. And I was like, oh my gosh, this company Pinterest, I got to find this company and invest, right? And so what I did, and nobody could find the headquarters, but I saw the outside of the building. It was in Palo Alto. So I took the picture of the outside of the building. I walked up and down the streets for a couple hours in the area I thought it was, and I finally found it. And I walked into the headquarters of Pinterest, and there's 20 young people there with, sitting down on computers. And I met the co-founder, Evan Sharp. And I met with Evan Sharp, and I gave him my business card, and I said, it's a pleasure to meet you. Most of my friends are starting to use Pinterest more than Facebook now. And he goes, I'm very humbled to hear that. Really nice guy, Evan Sharp. Then I started working on the round to try to invest. I missed it. Andreessen Horowitz beat me to it, which is another great venture capital firm. I think that investment round was at a valuation of around 200 million. Yeah. But you know what? You miss 100% of the shots you don't take. You know, I did well in Palantir and other investments afterwards. Yeah. So that was one that I missed on. But I'll give you another venture capital investment where a lot of people passed on, which was Snapchat. Okay, so when Evan Sharp, the founder, he's in SoCal, the founder of Snapchat, started to meet with venture capital firms, he was explaining his business model. And a lot of the old VC people here in the Bay Area looked at his business model. They're like, Evan, I don't get it. Why would I want to take a picture of my kids and have the picture disappear? That makes no sense. Then he came back a couple years later to try to raise money again. And he said, remember me? I've got 6 million subscribers now for my business. And the same VCs were like, oh my God, 6 million subs. That's the best business model I've ever heard of. Yeah. Okay. The first part of your question was, how do you know if an entrepreneur is investable? Yeah. So an entrepreneur has to be able to sell. Okay. Now, great CEOs and entrepreneurs and partners at any firm are salespeople. That's how they got there. So whenever I interview a CEO or an entrepreneur, and I've met with tons of startups over the years, I always think to myself this: okay, I'm pretending I'm a customer. Do I get excited about what they're saying? And if I don't get excited, if they can't sell, they have nothing. And the reason I say that is because their company is going to change, right? Especially if it's an early stage company. Their business model is going to change materially. Their company might not look like it looks right now. And I want to know that I'm still going to be excited about whatever this dude is trying to sell to me. You have to be passionate about what you're selling. And if you're not passionate about what you're selling and what you're doing, you're not investable. Next up, Sanjay wrote, Chris, I also wanted to ask, what does it mean beating the market exactly? What to be like, who keeps a tab on all these things? Yeah. So it depends on what your benchmark is. So if you're a mutual fund manager in the United States, quite often you're compared to the S&P 500, for example, which is a collection of the 500 most important stocks in America. And if you beat the S&P by 1%, that means you generated 1% or 100 basis points of alpha. So if the S&P is up 10% and your fund, the mutual fund, is up 11%, they've generated 1% or 100 basis points of alpha. Yeah. Speaking of alpha, this new of Apple, this new AI product, it's crap. Like I don't see what the big deal is about this Apple intelligence thing at all. Yeah. What are your thoughts? Okay, Bulali wrote, hey, Chris, any methods on predicting successful M&A? Yeah. So a couple of things. Number one, never buy a stock because you think it's going to be acquired. Ever. Always think longer term. But what I do love to do is this. If there's a company where I love the fundamentals and it gets absolutely murdered after earnings and people are emotionally selling it, I'll roll up my sleeves and I'll do the research. For example, LinkedIn breaks my heart that it got bought by Microsoft because I thought one day it was going to be $1 trillion company. But LinkedIn, I think it was the 2015, they bought Lynda, and it was a great acquisition. The market loved it. Then in 2016, they released earnings and they missed badly. And the reason they missed badly is because the market got ahead of themselves and they thought, oh my gosh, this year-over-year growth is going to continue again. But the year-over-year growth comps got tougher because of Lynda acquisition. Then the stock got murdered. It was down 30%. And whenever you see a great company like a LinkedIn, for example, stock pulled back a lot. What happens is the investment bankers from firms like Goldman Sachs, Morgan Stanley, et cetera, they'll look at the company, they'll do a financial analysis, then they'll call big companies and say, hey, buy this. Here's why. So the investment bankers called Microsoft had them buy LinkedIn. Now, yes, I'm oversimplifying it, but I love to buy broken stocks, but not broken companies. And a broken stock means a stock that's down 30% on earnings, for example, or one event, and people are panicking, and there's a gap in the chart which can be filled easily. And I could go down that path if you want me to. But a successful deal from an M&A perspective has to be accretive to earnings. Now, deals can be either accretive or dilutive. Accretive means it helps earnings go up so that the PE goes down, and dilutive is vice versa. Yeah. Okay, DF wrote, how long is long-term focused when trading? So let me talk investing first. So long-term investing is 5 to 10 years or longer. Or when it comes to real estate, and I'm working on releasing my real estate course soon, which includes a real estate business plan. With real estate, you got to think decades. You got to think to yourself, I'm never selling this piece of real estate. That way you can get the depreciation write-off forever and not have to pay it back. And you'll learn more about that in my real estate course, which is going to come out exclusively for my MBA students. Yeah, soon, November. Okay. Next up, Manas wrote, are we having an AI bubble? Like, I know 10 AI startups who do the same thing. It's crazy. Yeah. Okay. Is there a bubble or not? Yeah. Yeah, there is. I mean, the AI market is up materially. And even if you look at SMCI, which is kind of an AI stock, it's gotten murdered down 20 or 30%, given the fact that E&Y resigned as the auditor. It's still basically flat for the year. So yes, there is an AI bubble at this point. Do I still believe in AI? Absolutely. Now, the way I look at these stocks and these companies is I think to myself, in 5 years, is AI going to be more relevant or less relevant than it is today? Heck, way more relevant. Yeah. And I love it when stocks and the market pulls back materially, because that's when I buy. Yeah. All right. Okay, Eric, who's one of my gold MBA students from Florida, good to see you. You wrote exactly this. Our opinion from analysts because they may not be unbiased. I'm not sure I understand the question, but what I will say is whenever you see an analyst on CNBC or Bloomberg TV or whatever, there could be a bias. There could be a bias because if they work at a mutual fund, if they talk about a stock, they might own that stock. And it's usually a PM, not an analyst that does an interview. But if it's an analyst at a sell-side firm, there still might be a bias, even though there's an ethical wall separating research from investment banking. And I'll give you an example without naming names. Okay. Years ago, the head sell-side analyst at Morgan Stanley that covered Microsoft, etc., resigned, right? Adam Holt. And he went to, good guy, I know him, he went to Catalyst, which is a great tech investment bank here on the West Coast. And so Morgan Stanley called me and they asked me, do you want to interview for this job? And I said, no, thanks. I prefer working on the buy side. I then called buddies of mine that cover the software sector. And I said, hey, Morgan Stanley is looking. I'd love to introduce you. And there's one person in general, I can't name his name, but he said they would never hire me. And I said, why? You're great. He said, no, because I have a sell rating on Microsoft. I was like, so what? And if you read between the lines, you can't have a sell rating on Microsoft if you work at a very big investment bank. The reason is because Microsoft might be a big corporate customer and do a lot of M&A. Yes, I know there's an ethical wall separating the two, but if somebody has a hold rating on Microsoft, it means they're bearish. All right, next up, Manas wrote, NFT wave, what are your thoughts? Oh, dude, I haven't heard somebody mention NFT in years. Yeah. And I remember I had a Wolf of Wall Street video on my YouTube channel, and I was explaining how to sell a pen, right? And I said this. It's an NFT. And that joke did not age well. So NFTs, I believe in them if there's a dearth or a limit on supply. So I'm a big baseball card collector, always have been. I think I've got the biggest collection of PSA 10 Blue Jay cards in the world. But with any investment class, you always want to look at the underlying supply and make sure it's limited. So NFTs, the best way to explain it is they're like baseball cards. And the baseball cards that go up the most, or sports cards, or Pokemon cards, the ones that go up the most in value are quite often the ones where there's a limited supply. So NFTs are kind of like that. You can buy digital baseball cards if you want to. It's like art. Quite often you'll see a painting, and in the corner of the painting you'll say number 3 out of 200. It's a print. Make sure there's a limit on supply before you invest in NFTs. And if you do it, I recommend looking at sports cards. Yeah. Okay, next up, Hickey wrote, "Hey Chris, what are your thoughts on ServiceNow and its future role in digital transformation? How about the current management team?" Yeah, I love them. I had Amy, who heads up their LMS system, on my weekly webcast. I love them. I love ServiceNow. I remember it was Frank Slootman was the CEO. I loved him. It was unfortunate when he stepped down. But let me show you here. And I know I've met with Fred Luddy as well, who is the founder of ServiceNow. But I will show you here. Give me 1 second. I am a big fan. All right, give me 1 second here. Sorry about this. Fun doing these things live. Let me go to my Gmail. Let's show you here. Bill McDermott. Bill. There he is, Bill McDermott. I love the guy. Okay. I think he's one of the best. I think he's one of the best CEOs in history, and I think he should run for office as well. I'm trying to get her name. Okay, hold on 1 second. Bill McDermott. He made an introduction. Amy, hold on a second. Amy Reagan Morehouse, that's her name. Yeah. So she heads up global education. I had her on my webcast. It was several months ago. And if you want, you can watch a replay of that webcast, learn more about ServiceNow. So let me go here to weekly webcasts. But I love Bill. I think he's the best CEO in history. He's been through a lot too. Okay, give me 1 second. I'm trying to find the webcast. Where the hell is it? Here we go. Good. So I interviewed Amy week 248, and the topic was AI and your career. So if you want, you can see exactly what she has to say about ServiceNow and AI, etc.
Thank you.
And as with all of my webcasts, if you go to the description, you'll see that there's timestamps as well. Sorry it took me 8 million years to find that link. You can also see an interview with Brent Thill, who's the #1 software analyst on the planet. He's fantastic. He's great. I asked him about AI as well. And then also you can see my interview with Ilya Strebulov, who wrote this great book, The Venture Mindset. I really butchered that answer. I'm sorry. Malik wrote, "Thank you, Chris. I'll be back." Excellent. Thank you. All right. Coriolanus, first time seeing the call. Hope you join us again. Wrote, "Hey, Chris, what are some of your top movie/TV show picks that feature business and finance?" Yeah. Without a doubt, it's Billions, which is the best finance TV show ever created. You can go to my YouTube channel to watch all of my Billions videos. I've done one in the first couple of seasons. I will do every single episode. What you can also do is when you go to my YouTube channel, you can look through the playlist and you'll see that I did the movie Wall Street. I also did the movie The Wolf of Wall Street. And so I love those two movies as well. Yes, this one I did I think about a year ago. Check that out if you want to. What I'm working on right now also is The Big Short. It's taken me a while. I want it to be perfect for you, but there's so much fixed income stuff I want to explain, mortgage-backed securities, etc. That is coming out soon. Yeah, so those are great finance movies. If you want to learn about private equity, you can watch OPM, which is an oldie but a goodie. OPM, not the drug. OPM stands for Other People's Money. It's about private equity with Danny DeVito, the guy from It's Always Sunny in Philadelphia. Yeah. He was also in One Floor of the Cuckoo's Nest. Next question is, Manas wrote, "See you in an hour in-house, the house of Haroun Habibi." Thank you. See you there. God bless you and your family forever, and happy Halloween. Thank you. Same to you. This is the first year I'm not going out for Halloween with any of my kids. He's 14 now. He's too cool for school. It breaks my heart. And those of you with kids, by the time your kid is 12, you've already spent 90% of the time you'll ever spend with them. Spend every second with them, please. Yeah. All right. Okay. Michelle, who asked earlier about what's your video game setup for her granddaughter, wrote, I meant what type of game box setup. Let's say you play SimCity or something like that, or games we can play against each other. You used to talk about gaming with your boys a lot. Yeah. If you want to play SimCity, you can only really do it on a PC. EA, through their Maxis subsidiary, released SimCity back in 2013. It was a disaster because they made you play online initially. They butchered the brand. They basically shut down Maxis except for the Sims. Broke my heart. I got to meet with Will Wright at EA's headquarters years ago, who's a rock star to me. If you want to, if you want something where you can really interact and have more control, PC gaming probably makes sense. And for PC gaming, what you can do is you can always go to, I'm not sponsored by Dell, but you can go to Dell's website to buy a PC game. All right, so let's go to Dell Alien. It's called Alienware, and I own a couple of these. You can get an Alienware laptop if you want, or get something cheaper, which might be a desktop. Yeah. Or you can even just go directly to Best Buy and see their gaming PCs there as well. Don't create it yourself, as I mentioned earlier. Don't create your own PC because you mentioned your granddaughter is 7, and I don't want her to start a fire. Yeah. Or if she wants to set it up to play with her friends, just make sure you ask what console her friends have. If they all have a PS5, then stick with PS5. Same thing with Xbox. Yeah. Okay. And you wrote, and this is your old student from Texas. I remember you. Good to see you again. Okay, moving on to Peter C., who wrote, hey, Chris, you mentioned GTA. Yes. You ever play Half-Life and Portal? The cake is a lie. So maybe. Remember that part of it? Yeah. Which company would you say was the most badly mismanaged? Black Mesa or Aperture Science? Yeah. I can't answer that question, but yeah. But I do understand. Yeah, Portal is great. Yeah. I play any game that Naughty Dog Studio creates. Yeah. Meaning The Last of Us, Uncharted, etc. And if you haven't played The Last of Us, oh my God, it's a masterpiece. Yeah. Okay, moving on to Hickey, who wrote, with the current rate at which AI is being adopted in many organizations, would software consulting be a better career option than software engineering for the incoming computer science graduates? Yeah, I don't agree with Jensen Huang's comments about how AI is going to take away, all comp sci jobs, or he implied that at least. I would still go for software engineering, but you got to be passionate about it before software consulting. Yeah, because the thing is with software consulting, quite often, like when I worked at Accenture, you might not be creating a product, you might be doing maintenance on a product, so to speak. But if you're a software engineer at a company like Google, for example, you're actually originating, creating the product itself, which is more marketable from a skill set perspective. Okay. Oh, Ted, how are you? It's been a while, Ted Bell, and you always come up with good dad humor jokes. You wrote, just wondering, when two vegans get in an argument, is it still called a beef? Okay, I love that, and I will use that as dad humor. Yeah. And my youngest, Dylan, who's 14, is starting to roll his eyes, and when his friends come over, he's like, Dad, no dad humor when my friends are here. And I drove my son, Dylan, he's 14, can't drive yet, my youngest one, but I drove him to the movies with his friends, right? And before we left, I asked him, okay, can I come to the movie too? Because I wanted to see it. And he's like, and I said, I promise you, I'll sit right at the back. He was like, yeah. So anyway, Gladiator 2, that's the next movie I want to see. All right. Coriolanus wrote, Chris, hold on a second here, sorry. Hi, Chris. Finishing up my professional accountancy qualifications at the moment. Congratulations. and I want to take one of your MBA courses once it's done. Would you mind breaking down the difference between each one? Yeah, absolutely. Yeah. So you can go to my website to learn more about that. I'll do this real quick, I promise. All right, so we got HarounMBA.com FAQs up here. Yeah. So I've got 4 different programs, okay? And the 4 programs contain the same 500 hours roughly of content, which I'll get to in a second. Okay. The difference between silver, gold, platinum, and diamond is silver, you don't get access to me. Although you do get a 1-hour Zoom small Q&A session with me every Thursday in 25 minutes at 10 a.m. Pacific time. Gold and platinum, I teach these classes live. Okay. And I'll stop after each lecture to take lots of questions. Platinum, you also get 3 hours of one-on-one meetings with me. There's 20-minute increments, Mondays, Tuesdays, and Wednesdays. Okay, that's 3 hours over the course of 1 year. That's 9 20-minute meetings. Diamond includes all this stuff, plus you get 20 hours of one-on-one coaching with me, nobody else with me, confidential coaching. I help you with your career, help you with your investments, help you start a company, whatever it is. And for this one, I don't accept everybody into it. You can book a call with me to see if it's a good fit. Yeah. But anyway, hopefully that explains it. Now, in terms of the content of the MBA, which all these programs include, the roughly 500 hours or so of content, I add tons of new content every year, and all the new content you get for free as well. And so what I'm just about to add actually in early November is a complete real estate course that you'll get access to as well, where you're going to create a business plan for a primary residence or commercial or residential real estate investment. There's different tracks as well, like in all my courses. So you get every course I make for free forever. What's also included, and once you make the payment, you have access for life as well. There's a weekly call you can join as well, I mentioned before. If you scroll through this, you can learn more about each of the 6 pillars of this MBA program, meaning finance and accounting, where I teach you everything about finance and accounting and investing from scratch. I provide you with plenty of templates as well. And if you know finance and accounting, I want you to forget everything when you start my program, because I teach it to you in a different way. Entrepreneurship's part of it as well, a venture capital boot camp where I help you start a company, because failing to plan is planned to fail. Sales, marketing, communications, how to sell yourself better, economics management strategy, personal growth, how to, accomplish much more every single day, take your confidence to the next level. And then technology, lots of tech electives like, AI stuff, Python, Excel, etc. If you scroll down here, you can see a video on each of the 6 pillars. And the price of the lowest end one is $999 or $99 a month. And with all my products, there's a 30-day 100% money back guarantee. If you're not getting a massive return on your investment, if you don't think you are at least, in the first 30 days, ask for your money back. My return rate on all my products is about 1%. And my diamond, the return rate is 0%. Okay, meaning no one's returned yet. There's FAQs here, bunch of stuff written by students. And then down here, oh my God, it's endless. You got the curriculum. Okay, you can look through the curriculum, watch sample classes. It's endless. There's so much to it. Again, I had lots of new stuff every year. Again, it's a one-time fee of $999 or a monthly fee of $99 after the payments are done. You own the content forever, and the weekly webcast you join forever, and you get all my future courses forever. Yeah. So check it out here if you want to, and thank you. Yeah. Or you can go to this link you see right here for more details. Yeah. Now, let me check really quickly here. See the exposure. I feel like the exposure's not right. Oh, it's okay. And what you want is you want the Ghostbuster thing here to be around 80, but not above. I thought it was way lower than that. Okay. Okay, next question is Vinny, who actually goes by Justin, wrote, LOL, I agree with you. Drama teacher, most definitely. Justin Trudeau, yeah. Okay. Nashim wrote, hey, Chris, do you have any advice on how to change your careers? Yeah, absolutely. I'm 30 years old and I have 9 years of experience as an executive assistant, and I want to move to finance. I'm graduating this year with a BA in finance. Yeah. The only way to do it, okay, the only way is to set up lots of informational meetings. Now, in my MBA program, I have students that have taken their MBA from the top 10 schools on the planet. They say they learn more at a fraction of the cost in the first 30 days of my program. If you want, join the Silver MBA program. It's self-paced. And in the first couple classes, I teach you how to network. Okay? And that will help you secure or materially increase the chances of you being able to change careers from an EA to work in finance, maybe as an analyst, so to speak. And I teach you everything about finance from scratch as well. Okay, moving on to Chris, who wrote, the best advice I got from listening to your videos is to look at earnings 5 years from now. I used to only focus 1 year out, but since I started looking 5 years out, I've been killing it in the market. F&A. Love to hear that, man. I love it. Because if you're focused in the long term, you just kind of tell yourself when it comes to the stock price, I don't know the path, but I know the destination. So I love this feedback. It makes me feel good. Thank you. And now you understand why a lot of growth investors do exceptionally well buying expensive stocks. These stocks are not expensive on a PE basis if you look at your earnings estimates in 5 years. I remember with Amazon years ago, I owned it. And, my buddies in the hedge fund sector would say, Chris, you're cray-cray. Amazon's a widowmaker. It's over 100 times earnings. What are you thinking? And I said, yeah, but it's like 5 times earnings based on my 5 or 10 year earnings estimates. The longer the view, the wiser the intention. I love that. Nicely done. Nicely done. And whenever you're forecasting financial statements, which I teach you how to do in my MBA program, I always want you to forecast, at least 5 years out. And then I want you to base your earnings estimates, okay, on 5 years out from today and discount it into today's terms, okay? Which I do with price to revenue, as well as price to earnings, etc. Yeah, and DCF. Nicely done. Love it. All right, Luigi, how are you? I always smile when I see your name. My little sister, Katie, who passed away this summer, she had a tough battle with lupus. She's in heaven now. And Katie, I'm so sorry. When you were younger, when we played Mario Brothers together, I always made you be Luigi and I was Mario. I'm so sorry. And sometimes, Katie, what I also did was I gave you a controller that wasn't really attached, and I pretended you were playing. Yeah. I missed you. I love you. Luigi. Yeah. Luigi wrote, hi, Chris. Good morning. Always a pleasure talking to you. Do you think that the Bitcoin rally is because the market is pricing in a Trump win? Yes, I do. Yeah. And I'm not going to get political here, but a lot of investors on Wall Street are pricing in a Trump win. Again, I'm not going to get political, right? And that means the inflation trade. Yeah. That's one of the reasons why Bitcoin's above 70,000. Yeah. I own a ton of Bitcoin. I'm never selling it. And then you asked me, what do you think about Trump World Liberty Token? Then you wrote, thank you, you're the best. So thank you. I don't know anything about it. Yeah. But I do believe, and I've said this since day one, and I started buying cryptos back in 2013 when I sat on the boards of crypto companies when I worked in BC. But I've said this since day one. Over 95% of all cryptos are a scam. And the problem is they're not regulated. Right? They're kind of regulated by the laws of mathematics, the good ones at least. But there's no S1 filing, for example, whenever you want to invest in a crypto. And so in my MBA program, I also teach you how to invest in cryptos by creating your own version of an S1. Yeah. And then moving on to Thomas, who wrote, hey, Chris, I'm Portuguese. Excellent. I was in Lisbon 2 weeks ago, meeting with just Udemy. There was a conference there. Absolutely loved it. Yeah. The food, the people, the beautiful place. I love it. Yeah. You wrote, I'm Portuguese with a master's in finance with 2 years of experience in credit and now market research. And I want to break into ER in London or the United States, but I haven't gotten an interview. Any tips? Yeah. Don't apply for jobs. Set up informational meetings instead. As I mentioned earlier, if you apply for a job, you have a 1 in 250 chance of getting a job. The person that gets it knows someone at the company. So whatever firm it is you want to work at, you can join my MBA program, and I teach you in the first couple lessons, how to set up an amazing LinkedIn profile and set up informational interviews to be able to network your way into a job. It works, I promise you, but you have to do 30 to 40 meetings with each company you want to join. And if you think that's too much work, and I say this with love in my heart, how badly do you want that job? Let me help you. Okay. Next up, Chris Patel wrote, can you speak about, that's Canadian for about, can you speak about why retail investors should try to understand how credit markets work? Yeah. So quite often what happens is the fixed income markets lead the equities markets. Fixed income means interest rate bond stuff. And so in 2008, when we were within 24 hours of bank machines not working, my buddies that performed the best in the hedge fund industry all had friends that worked in fixed income. So you have to thoroughly understand that, and you have to understand where interest rates are going as well. Let me explain it really quickly. Okay, and we go right to the source as always. Okay, let's go here. So let's go here together to treasury.gov. Okay, and I'm going to show you the yield curve. Okay, so this is the United States Department of the Treasury, and you'll see interest rates are right here. So we're going to look at the daily yield curve. Okay, and we're going to select the current month. Okay, and right here we see interest rates. Okay, 1 month, 30-year. Remember that, 1 month, 30-year. Let's go to the bottom here. 1 month, 487, 30-year. Yield curve is still inverted. Okay, so you have to analyze this closely. The government sets this right here, the Federal Reserve, and the market kind of sets this right here. Why is this important to look at, the short-term, long-term rates, especially the long-term rates? It's important to look at, right? Look at this, the 30, oh my God. The 30-year was just around 4% beginning of the month. Now it's 4.5%, a lot higher because the markets, this is not a political thing, but the markets are kind of pricing in a Trump win. It's important to look at that closely because expectations of interest rate and inflation impacts all of us. So why have expectations of rates longer term gone up from 4% to about 4.5% in the past 30 days or so? Well, the reason is because, a lot of people in the markets, again, are pricing in a Trump win. I'm not going to comment on that. It's just what people are saying. And if Trump were to win, he would increase tariffs. What does that mean? What that means is he would make stuff more expensive for Americans, right? So if Americans want to buy something from overseas, when it gets imported, it's more expensive. What does that mean? Well, that means that prices will be higher, which means inflation. Well, how does the government fight inflation? Well, they have to raise interest rates. That's why it's important to pay attention to the credit markets and fixed income markets in general as well. And it impacts all of us because that 30-year rate I just showed you, which went from 4.08% to about 4.5% in the past month, that 30-year rate affects you because many of us have mortgages based on the 30-year rate. Now, because investing in us, meaning real estate in us, is more risky than investing in the U.S. government, there's obviously a premium on top of that 30-year. So if the 30-year fixed rate, if the 30-year government rate goes from 4.08%, which it did beginning of October, to about 4.5% now, that means that our mortgage rate, if we want to get a mortgage, went up by 50 basis points or 0.5%. It's a big deal. Yeah. Okay. And then you wrote, I see a lot of people say this company has a lot of debt without understanding how there could be good debt versus bad debt. Yeah. And later this year, actually, at the end of December, Gary, one of my amazing students, and I, Gary's a former investment banker and a CPA, we're releasing a forensic accounting course. And what we're going to do is we're going to teach you how to read the footnotes and the 14 main footnote categories. And one of the most important categories is the debt and what debt payments are due. We'll look at interest coverage ratios, covenant ratios, et cetera, in a lot more detail. Because a lot of people that invest in stocks, a lot of my students, tend to focus on the equity side, but not the debt side as much, which is crucial. And you're totally right about that. Yeah. Okay. All right. And then Tomas wrote, I know how to do the research, how to model, and how to pitch. I'm just having trouble getting into interviews. I have a BNP internship, good firm, in credit and M&A, and currently at a Portuguese bank. Yeah. Getting interviews is just part of it. But more importantly, you have to network to get informational interviews if you want to get a job. I promise you. Check out my programs. They help, I promise you. If not, there's a 30-day, 100% money back guarantee. Okay. I feel good, man. I've worked out, I've done weights for 6 days in a row. I feel awesome. My Oura ring continues to give me good feedback. And if anybody wants to get an Oura ring, I highly recommend it. It's a bit pricey sometimes, so get it on sale. But my readiness score is 85%. And I only exercise when my Oura ring here. If my readiness score is above 70, it's been above 80 like for a week in a row. So I've exercised every day. My sleep score is above 84. My deep sleep is great as well. This is the whole quantified self movement. The great thing about the Oura ring is that it's got sensors on the inside. It'll tell you if you're getting good deep sleep, and it will tell you if you should not exercise, meaning if your readiness score is like 60 or something. Because if you exercise when your readiness score is not high, there's a higher probability you'll get sick. Yeah, no brainer of investments. Okay, I do have to wrap up this question this call in a couple of minutes. Per the link you see down here or the description, if you're in my silver MBA degree program, if you go to the very first lecture of your program, if you're enrolled, you can click a link to join my weekly 1-hour Zoom call. Yeah. All right, so give me 1 second. Okay, and then Coriolanus wrote, if there was any hedge fund to read up on or study, which one would it be? Which do you think is the greatest? It depends what you want. If you want to use technology skills and AI in order to pick stocks, it'd be Renaissance Technologies. So Renaissance was founded by Jim Simmons in the early 80s. He left the NSA and started his own hedge fund. God bless me, passed away recently, but their average return is, on a gross adjusted basis, is over 60% since the 80s. So they use AI. So you might want to do research on them. It's tough to get info on them, and they don't have to share their methodology. But there's some stuff out there, I think. Aside from that, I would do a lot of research on Julian Robertson, who also passed away recently. God bless him. He started Tiger, a hedge fund in the 1980s. And the reason why he's great, or was great, God bless him, is because he's a fundamental investor, meaning he takes 3-year bets or so. He's longer term focused. And I mentioned Tiger because a lot of great hedge funds are called Tiger Cubs. And they were founded by people that used to work at Tiger, like Chase Coleman, who I've met before. He started his own Tiger Cub, his own hedge fund called Tiger Global. There's Maverick. Lee Ainsley runs it. There's tons of them. Just do a search on Tiger Cubs. Yeah. Or what you can do is go to my YouTube channel and you can watch my Billion series where I talk about some of the best hedge funds in them. Yeah. Okay. But for me, I'm a bit biased. I worked at Citadel, and so I think that's probably the greatest hedge fund today. Yeah. All right. And I do think that Ken Griffin, who I've met a number of times when I worked there, is going to be the richest dude in the world one day. Yeah. Wicked smart. Okay. All right. Next up, Fred Mendoza wrote, who do you think is more sensible when it comes to developing and releasing better products, Microsoft or Apple? Yeah. And I answered this one earlier on. Definitely Apple. Microsoft has had more failed products. Earlier on, I mentioned some of their hardware products they failed with. They've had a lot of software failures as well, including many renditions of Internet Explorer, which eventually got rebranded as Edge. Also, they had this old operating system called Bob, which failed. You can look it up. And they've had other mistakes too, like Clippy. Anybody get that? I'm dating myself here. Yeah. Okay. Let me turn the AC on here. JK wrote, cool, I can't wait to see The Big Short. Yeah, it's a great movie, and I will be releasing that shortly. I'm so sorry. But my vlog on that will be coming out soon. Yeah. Yeah. It's so funny because Frontier's offices in that movie and in real life, that office, I went to that office when I was on my global international roadshow to raise capital for my hedge fund years ago. Alexa, stop, please. Okay. And Yellow donated some money as well. Thank you so much. Appreciate that. Thanks. And again, that will go directly to charity to build schools. Yeah. I'm going to build 1,000 schools in my lifetime. Okay. If I was a quota-carrying sales rep, I'd be fired so many times. But as James Cameron, a proud Canadian, he once said, if you set your goals really high and you fail, you still fail above everyone else's expectations. Yeah. Yeah. Okay. There's tons more questions I see here. I'm so, oh my God, good. Aporia, who had the first and final comment, wrote, Bonsai Buddy Chippy. I keyed. I love it. I know there's lots more questions. Please ask them next week. Or if you want, join my Silver MBA degree program by going to learn.harounventures.com. And then in the first lecture, you can click to join the weekly Zoom call, and I can answer those questions there. God bless you all. Please have a wonderful Diwali, the Festival of Lights. Truth wins over darkness always. I love it. And I will see you next Thursday and every Thursday forever. And I'm going to end with a very short video that is going to change your life. It's an interview with Steve Jobs that I licensed from the Silicon Valley Historical Association. God bless you. Thank you so much for your questions today.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it. That's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.